Welcome to another episode of Money Mind Unlocked. I'm your host, Scott Blaze. If you're starting out with zero credit history, or trying to rebuild after financial missteps, today's episode is for you. We're diving into how to build credit from scratch, step by step. With context, strategy, and practical tools, credit is more than a number. It's a reputation, a trust score. It determines whether you get approved for a loan, the rate you pay on insurance, the house you can rent, and in some cases, the job you can land. But here's the thing, they never taught us how to build it. We're handed a world that runs on credit, but not a playbook for using it wisely. That's what this episode will give you. Let me start with a story. When Maya turned 19, she applied for her first apartment. She had a job, cash for rent, and glowing references, but her application was denied. Not because she was irresponsible, but because she had no credit history. She didn't understand how that was possible. She'd never missed a payment, because she'd never borrowed anything. In the eyes of the system, she was invisible. That moment lit a fire in her. She made a plan. Within 18 months, she went from no credit score to a 740. And she did it by following 6 key steps. Let's break them down. Step 1. Understand what builds credit. There are 5 key factors that determine your credit score. 1. Payment history, 35%. 2. Amounts owed, utilization, 30%. 3. Length of credit history, 15%. 4. Credit mix, 10%. 5. New credit, 10%. The most important part? Paying on time, every time. Even a single missed payment can tank your score by dozens of points. Maya set up autopay on every bill she had, utilities, subscriptions, student loans. She didn't rely on memory. She built a system. Step 2. Start with a secured credit card. If you have no credit, most traditional credit cards won't approve you. That's where secured cards come in. You give the bank a refundable deposit, say, $200, and that becomes your credit limit. You use the card just like any other, and the activity is reported to credit bureaus. Maya got a secured card through her local credit union. She used it once a week, for gas, and paid it off in full every month. That consistency began establishing her credit profile. Step 3. Keep utilization low. Utilization is the percentage of your credit limit you're using. The rule of thumb? Stay under 30%, but the sweet spot? Under 10%. If your card has a $300 limit, don't spend more than $30 at a time unless you're paying it off before the statement closes. Maya set alerts on her phone to remind her to pay off the balance before the statement date, not just the due date. This kept her utilization ratio low, and her score climbing. Step 4. Become an authorized user. This is a strategy most people overlook. If you have a parent, partner, or close friend with great credit and a long credit history, ask if they'll add you as an authorized user on one of their credit cards. You don't need to use the card. You don't even need to hold it. Their on-time payments and credit history will show up on your report. Maya's older brother added her to his account. It gave her profile an instant boost, without her spending a single dollar. Step 5. Diversify your credit. After 6 months of consistent payments, Maya applied for a credit builder loan. It's a small loan, often offered by credit unions, where you pay installments into a savings account. At the end of the term, you get the money back, and the positive payment history boosts your score. It added a new type of account to her credit mix, which helped raise her score even more. Before we continue, if this episode is bringing you value, take a moment to like, comment, share, and subscribe. That's how this podcast grows, and how we help more people take control of their financial story. Now, let's keep going. Because the next part is about avoiding the mistakes that destroy credit faster than anything else, and how to protect your progress once you've started building. Step 6. Protect and monitor your credit. Once Maya started building momentum, she took one final but critical step: credit monitoring. There are dozens of free tools out there: Credit Karma, Experian Boost, Credit Sesame. These platforms show your score, help you spot errors, and track your progress. Maya checked her credit once a week, not obsessively, but with purpose. If anything looked off, a new account she didn't open, a late payment that wasn't hers, she disputed it immediately. This vigilance paid off. Within a year and a half, her score crossed 700. She rented her first apartment, got a better car loan rate, and qualified for a rewards credit card with no annual fee. All because she understood how the system worked, and worked it with intention. Now, let's address some common myths. Myth number 1. You need to carry a balance to build credit. False. You do not need to carry debt. In fact, carrying a balance can lead to interest charges, which hurt, not help, your financial growth. What helps your score is showing that you can borrow and repay consistently. Myth number 2. Checking your own score will hurt it. Also false. There are two types of credit checks: hard inquiries and soft inquiries. Hard inquiries happen when you apply for credit. They can affect your score slightly for a short time. Soft inquiries, like checking your own score, don't impact it at all. Myth number 3. You need a high income to build good credit. Wrong again. Credit isn't about how much you earn, it's about how you manage what you have. Someone making $30 a year can have a better score than someone making $300 if they use credit wisely. Let's shift to the bigger picture. Credit is a tool, not a goal, not an identity, a tool. When you understand how to use it, it becomes a lever, not a limit. But if you use it emotionally, impulsively, or without a plan, it can become a trap. That's why mindset matters just as much as mechanics. Let me introduce you to a second story: Jake. Jake got his first credit card at 18. No one explained the fine print. No one told him about interest rates. He treated it like free money. In 2 years, he racked up $7 in debt, and he couldn't pay it off. His minimum payments barely touched the interest. His score plummeted. He couldn't qualify for a car loan, couldn't refinance, and couldn't get approved for his dream apartment. He didn't just feel broke, he felt broken. But Jake did something powerful. He stopped blaming and started learning. He read every book he could on personal finance. He took on a side hustle to pay more than the minimum. He stopped using the card altogether and negotiated lower interest rates with his lenders. It took him 3 years, but he paid off every dollar. And now, his score is 760. His story became his strength. Maya and Jake had opposite starts, but they both ended up with excellent credit because they chose intention over impulse. So let's recap and translate this into action steps. 1. Get a secured credit card. 2. Use it lightly. Pay it off in full. 3. Keep your credit usage under 10%. 4. Become an authorized user, if possible. 5. Consider a credit builder loan. 6. Check your credit report monthly. 7. Set every bill to autopay to avoid late payments. 8. Ignore the myths. Follow the math. 9. Don't see credit as money, see it as responsibility. 10. Use it with purpose, not pressure. And if you're just starting now, remember, it's never too late. The credit system is designed to reflect your most recent behavior. That means what you do today matters more than what you did last year. The final piece of the puzzle? Credit is part of a bigger financial picture. If you have credit but no budget, you're still vulnerable. If you build a score but ignore savings, you're exposed. If you focus on credit and ignore income, you're missing leverage. Smart money management includes credit, but it's not limited to it. Build your score, then build your buffer, then build your income, then build your wealth. In that order, one block at a time. We'll continue this journey together. Because you're not just building a score, you're building your foundation, and that's something worth getting right. Coming up in the next episode, we'll break down the most overlooked credit traps young adults fall into, and how to avoid them without living like a monk. Until then, I'm Scott Blaze, and this is Money Mind Unlocked. Let's go deeper into why credit matters, and why building it from scratch gives you more than just access to loans. Because at the heart of credit, there's something deeper at play: trust. Credit is how institutions measure trust in your ability to keep your word. But the process of building credit teaches you to trust yourself, to develop discipline, foresight, and responsibility. That's why this journey can be empowering. Now let's unpack how to build credit when you don't even have a steady income yet. Like if you're still a student or working part-time. Option 1. Student credit cards. Some banks offer special student credit cards with lower limits and fewer requirements. These are ideal for getting your foot in the door. But the key remains the same: use it once or twice a month. Pay it off before the statement closes. And don't treat it like extra income. Option 2. Credit builder apps. Apps like Self, Grow Credit, or Kickoff allow you to build credit without traditional borrowing. Some link to subscription services or use small loans you repay monthly to simulate repayment behavior. These tools are especially useful for people with limited access to banks or traditional credit cards. Option 3. Rent reporting services. Did you know you can get your rent payments to count toward your credit score? Services like RentTrack or Experian Rent Bureau allow your monthly rent payments to show up on your credit report, boosting your history and on-time payment record. Maya did this when she moved out on her own. She paid rent like she always had, but now it counted. So if you're paying rent or utilities in your name, see if there's a service that can help report that history. It turns everyday habits into credit-building actions. Let's also talk about mindset traps. Some people feel shame for not knowing how credit works. Others feel overwhelmed by conflicting advice. Let me be clear: you are not behind. You are just getting started. And you are not alone. That's why this podcast exists, to break down big ideas into small steps. So let's do that now. If you're starting with no credit, here's a 90-day roadmap. Week 1 to 2, research and apply for a secured credit card. Week 3, set up autopay and link the card to a small recurring expense, like Netflix or Spotify. Week 4 to 5, explore becoming an authorized user. Week 6 to 7, look into a credit builder loan or credit building app. Week 8, enroll in a rent reporting service if applicable. Week 9, begin tracking your credit score weekly through a free tool. Week 10 to 12, maintain all accounts with on-time payments and low utilization. By the end of those 90 days, you'll have a credit profile in motion. It may not be perfect, but it will be progressing, and that's what matters most. Building credit is not about chasing a number. It's about creating financial options. It's about being able to walk into a bank, an office, or a dealership with confidence. It's about unlocking access to better rates, stronger opportunities, and more control over your choices. But above all, it's about building habits that spill over into every other area of your financial life. Let's not pretend this is just about cards and scores. It's about self-trust. It's about identity. It's about who you become in the process. When Maya paid off her card every month, she wasn't just building a score, she was building a new narrative. One where she saw herself as capable, consistent, and in control. When Jake clawed his way out of debt, he wasn't just paying numbers, he was reclaiming belief in himself. And when you take your first step, whether it's a secured card, a credit builder loan, or simply learning what utilization means, you're doing the same. So, let me leave you with this. You don't have to master everything today. You just have to take the next right step. Your credit journey is yours to write. Let's make sure it's one worth reading. Here's something most people never think about. Building credit from scratch gives you the rare chance to build it right. Most adults learn about credit by making mistakes, maxing out cards, missing payments, getting overwhelmed with debt. But if you're starting now, you can learn from their pain without repeating it. Think of your credit history like a resume. Every account is a job. Every on-time payment is a recommendation. Every utilization percentage is a proof point. What kind of resume do you want to build? Solid, reliable, trustworthy. Here's a strategy I call credit stacking. Start with one secured card and one credit builder loan. After 6 months, if your payment history is perfect, apply for a second line of credit, maybe a store card or a student card. Why? Because more accounts, managed responsibly, help build a deeper credit profile. But here's the golden rule: never open multiple accounts at once. Space them out. Give each one time to mature. Think of it like planting trees. You don't plant 100 seeds in one hole and hope for a forest. You plant them with space. Give them water and sunlight. And let time do its work. Same with credit. Now let's bust another myth. Closing old cards helps your score. Nope. Length of credit history matters. That means older accounts help your score, even if you don't use them often. Instead of closing a card, use it occasionally and pay it off immediately. I have a card I only use for a $10 subscription, and that's enough to keep it active without affecting my budget. And here's another powerful tactic: bill payment reporting. New tools now allow your utility and phone payments to be reported to credit bureaus. Tools like Experian Boost take advantage of this. It won't work for everyone, but for some, it can offer a quick bump. Remember, the goal is not to hack your score, it's to build it honestly, patiently, and intelligently. Now, let's talk emergencies. You can have perfect credit and still face a setback if you're not financially prepared. That's why I recommend pairing your credit building journey with a $500 to $1,000 starter emergency fund. Because nothing ruins a perfect score like one missed payment due to a surprise expense. If your car breaks down, or your job cuts hours, or your laptop dies, you want to be able to cover it without defaulting. That's the difference between building credit and protecting it. Maya learned this when her job was late on payroll, her rent was due, and her bank account was tight. But because she had a $600 emergency buffer, she didn't miss a payment. Her score kept climbing. Here's the lesson: credit is your financial face to the world, but cash is your armor. Build both. One gives you access, the other gives you strength. Let's also look ahead. What do you do after you've built credit? You use it strategically. You don't just chase points or flashy rewards cards. You align your credit behavior with your values. If you're a traveler, maybe you get a card that earns miles. If you're focused on cashback, maybe you rotate between categories. But you never let rewards dictate your spending. If you wouldn't buy it with cash, don't buy it with credit. Simple rule, big impact. Also, check your credit report annually through annualcreditreport.com. It's free, and it gives you access to all 3 bureaus, Equifax, Experian, and TransUnion. Look for errors, verify open accounts, dispute inaccuracies. This audit habit will serve you for decades. By the way, did you know that employers in some industries review credit reports before hiring? It's not common everywhere, but in finance, law, And government, it's real. That's another reason to take this seriously. Credit isn't just about loans. It's about reputation. And your reputation, once earned, becomes leverage, the kind that opens doors when others stay closed. So, here's your reminder. This journey isn't just financial. It's personal. You're proving to yourself that you can be trusted with responsibility. That you can delay gratification. That you can learn what no one ever taught you, and thrive anyway. That's powerful. And it's only the beginning. Let's close with one final story. A few years ago, I met a young man named Darren. He was 21, working 2 jobs, and supporting his mom. He had no credit history, no bank account, and no time to study finance. But he had a vision. He wanted to buy a house before 30, not to flip it. Not to impress anyone, but to give his family a place they'd never have to leave. He knew he had to build credit. So he started the hard way. He went to his local credit union and applied for a secured card with $200 he'd saved in cash tips. He set it up with AutoPay and used it once a week, for groceries. He read blogs, watched videos, listened to podcasts, yes, including this one. In his first year, he added a credit builder loan. Then he became an authorized user on his aunt's account. Then he got a cashback card with no annual fee. Each step was slow, but each step was forward. By age 24, his score was 760. He'd saved $12. And when the right property came on the market, he got approved with a great rate, put down a solid deposit, and became a homeowner. He wasn't rich. He wasn't lucky. He was focused. He used credit as a stepping stone, not a shortcut. And because of that, he changed the course of his family's story. That's what this is about. Building credit from scratch isn't flashy. It won't go viral, but it's one of the most powerful things you can do for your future. So here's your challenge. Take one action today. Open a secured card. Sign up for a credit tracker. Ask a trusted relative about becoming an authorized user. Start something, build momentum, and then keep showing up. Not perfectly, not instantly, just consistently. Because credit is not built in a day, but it is built daily. And if you've made it to the end of this episode, you're already ahead. Thanks for spending this time with me. If you found value in this episode, share it with a friend who's just getting started. They don't need perfect advice. They need direction, and maybe today, that direction comes from you. Until next time, this is Scott Blaze, and you've been listening to Money Mind Unlocked. Every journey starts with a decision to begin. So whether you're holding your first credit card, disputing an error, or simply learning how the system works, know this: you are not behind. You are building, and the habits you form today will shape the freedom you enjoy tomorrow. Let's keep going, together, because your credit journey isn't about luck. It's about discipline, knowledge, and belief in the future you're creating, one decision at a time. You've got this, and your future self will thank you for starting today. Credit isn't just a score. It's a story, and you're the one writing it. Before we end, let's reflect on what this all truly means. Building credit from scratch is not just a financial task. It's a vote of confidence in your future. It's the act of saying, I will take ownership of my story. You're not waiting for permission. And you're not hoping for rescue. You're building capability, one habit at a time. Whether you're just starting or rebuilding after a mistake, your direction matters more than your starting point. And if you stay consistent, if you make payments on time, keep your balances low, stay patient and aware, you will see the results. The world may measure you by numbers, but you are so much more than that. Still, the numbers you build will open real doors. So keep walking, keep building, keep believing that what you're doing today is going to compound into something powerful tomorrow. Thank you for listening. Until next time, take care, stay focused, and never stop learning.